on the Shree Cement stock.
Okay, thank you very much for that, Nigel. Prakash is still with us. Prakash, thoughts on Shree Cement and what Nigel had to share?
So I do agree at the points which the brokerage has pointed out. But what you have to understand, Shree Cement has grown historically and very consistently with internal accruals and hardly any external debt to rely on. There was only one time when in the Middle East they looked at an inorganic proposition which somehow didn't work out and which the market also didn't like. Apart from that, I think they've been stupendous in terms of how they've utilized capital and efficiently manages, and that keeps them absolutely very competitive. Now, even if their expansion is not in the early teens as an Ambuja, as a Ultratech or Dalmia would be doing, they'll make sure that they grow at 6-8% capacity, so it's very profitable. So I'm a believer that any fall in Shree Cement just makes the valuation much more reasonable because it tends to be valued at premium valuations. But I somewhat don't agree to this logic that because the capacity is not as well driven or this not playing catch up with the other players, they're going to miss out on anything. I don't think so. In fact, the market will give you adequate pockets to sell your things to, and that's what's more important. You sell what you produce, but at a profit.
Prakash, let's talk about the, beyond Adani, there's another newsmaker today. It has to be State Bank of India. There's a 5% up move as we speak. SBI right now at 561. Buy, sell, stay away, eternal buy. What is it for you?
No, so see, one thing you need to realize today's move in the banks, particularly SBI and the larger ones like BOB and all, is probably a bit of short covering, a bit of, catch up with all the lost ground, which was more sentimental than driven by fundamentals. The bank kept on clarifying, giving statistics and numbers about their exposure to the group, but still, people had that niggling doubt that it would probably be much more beyond that. Now, going forward, what's going to happen is most of the banks continue to grow at scorching paces, which we've seen in the last 2 quarters when banks suddenly became the darling of the market. Is going to be a challenge. So NIM growth and anything which is in the mid-teens is going to be very, very high as a benchmark. You probably have cost of funds going up as well because you've still got interest rates peaking up. So there's this whole rush to competitively increase your CASA at some reasonable level. So all of those things will happen and will start tempering. So this expectation and exuberance on growth is what you need to temper. From that perspective, it's probably a nice time to buy into SBI whenever there is some sort of a softness in the price. But you would need to have a slightly longer term orientation. The Adani saga is probably played out today well in terms of the effect. But organic growth itself is something which you need to understand is going to be fairly even and moderate. It's not something which is very spectacular for at least the next 2 quarters. And then we'll, of course, have to look at how things happen after interest rates have peaked out, if they do. So my sense is you would buy SBI, but at reasonable levels. And as a matter of disclosure, I do have personally exposure to the name. But it's definitely something you could have in your portfolio and not be too worried about.
Okay, all right. Always good hearing your thoughts. Prakash, thanks so much for joining us this Friday afternoon. Hopefully, it's a good evening for you as well. Thanks so much for joining in.